Although tech stocks were the biggest winners in 2020, 2021 could be a bit uncertain. Tech companies have kept the world running throughout this pandemic. However, there have to be some serious concerns about a bubble forming. Although tech exposure is always good for growth purposes, there have to be some doubts about overinflated valuations and further worries of higher taxes and stricter regulations now that Democrats have won control of the Senate. History in the markets also repeats itself, and recent IPOs of DoorDash and AirBnB, ABNB, echo traumatic memories of the dot-com crash. There certainly are unanswered questions for tech stocks. What will happen once COVID eventually goes away for good? Do tech stocks have more upside potential despite their valuations? COVID numbers are still surging to record highs with further shutdowns imminent. However, could this be a good thing for tech stocks? Sentiment is certainly mixed right now, and there will certainly be a tug-of-war between good and bad news for the foreseeable future. Despite the uncertainty, our artificial intelligence AI algorithms at Q.ai have identified intriguing tech stocks rated as top buys. Sign up for the free Forbes AI Investor newsletter here to join an exclusive AI investing community and get premium investing ideas before markets open. Activision Blizzard is our first top buy for the month. The gaming industry has been booming the last several years, and with more people at home due to COVID, could gain even more steam. Best known for its Call of Duty and Guitar Hero video game franchises, our AI systems have rated Activision D in technicals, B in growth, A in momentum volatility, and B in quality value. Activision closed up 0.88% to $90.69 on volume of 4,544,124 versus its 10-day price average of $90.72 and its 22-day price average of $87.37, and is up 0.88% for the year. Revenue grew by 18.05% in the last fiscal year and grew by 9.16% over the last 3 fiscal years. Operating income grew by 52.81% in the last fiscal year and grew by 101.28% over the last 3 fiscal years. And EPS grew by 46.11% in the last fiscal year and grew by 691.43% over the last 3 fiscal years. Revenue was $6,489 million in the last fiscal year compared to $7,017 million 3 years ago. Operating income was $1,744 million in the last fiscal year compared to $1,324 million 3 years ago. EPS was $1.95 in the last fiscal year compared to 36 cents 3 years ago, and ROE was 12.42% in the last year compared to 2.94% 3 years ago. The stock is also trading with a forward 12 MPE of 27.09. Our second top buy for the month is Take-Two Interactive. Take-Two is another gaming giant that also could see even more upside potential with people continuing to stay at home. Take-Two Interactive is best known for its GTA, NBA 2K, and Red Dead franchises, and is also at the forefront of competitive esports as it owns 50% of the NBA 2K League.